Hello, everybody, and welcome to the second day of the 12th annual forum of the UNDP Business Call to Action, being held on the sidelines of the 77th UN General Assembly. I'm Maria Ramos, and it's my pleasure to be the official Master of Ceremonies for the BCtA Annual Forum 2022. And we are delighted to have you back with us today. Now, yesterday we had an exciting day of discussions around inclusive innovation and collaboration, which are at the core of the response to these uncertain times. And we highlighted the potential of government-led inclusive innovation that collaborates with the private sector to provide essential services to underserved populations. Plus, we also explored inclusive public procurement, IPP, and this is a new way of looking at public procurement under which the government meets its needs for essential goods and services through the private sector by engaging small and medium enterprises, SMEs, and inclusive businesses, IBs, in the public procurement process. Now, if you missed any of these discussions, you can access the official annual forum website next week to view all of the video recordings, and each session will be there for you. Alternatively, you may also visit BCTA's LinkedIn, Twitter, and YouTube accounts to watch the recordings of this year's annual forums. All right, let's look at today, and we will continue the discourse on the role of the private sector in development cooperation and how innovative forms of collaboration between the public and private sector can drive sustainable development. But before we move into the annual forum's third and fourth sessions, let's first welcome our guest keynote speaker for the day. Ulrika is Assistant Secretary General and Director of the Bureau of External Relations and Advocacy at UNDP. Now, in her role as Director of External Relations and Advocacy, she leads the organization in nurturing and growing key relationships with member states and new and emerging partners. She also leads the UNDP's communication and advocacy as it works to realize the vision of the Sustainable Development Goals. Now, Ulrika previously served as Sweden's State Secretary for International Development, Cooperation and Climate. She's been instrumental in reshaping the country's international development cooperation to support the achievement of the 2030 agenda. And she combines a strong policy background with parliamentary and civil society experience. And she's had several assignments also in Latin America and Africa. Let's listen now, ladies and gentlemen, to Ulrika. The floor is yours.
Thank you so much. That was a long introduction, but so great to be here. And I was just saying, you know, in these times, and this is what we hear throughout the General Assembly, that goal 17 on partnership is so key, not only to get things done, to get back on track and move forwards, but also to make sure that we have a hope that things can actually improve. So very much looking forward also to have the opportunity to look into the different sessions. Now, UNDP for the first time in 32 years has been calculating that what we call human development has declined in a way that we have not seen since we started to measure back in the 1990s. It's really taking the world, and you see it as well, we are discussing it throughout UNGA, it's taking the world back to the time after the adoption of the 2030 agenda, but also, of course, then the Paris Agreement as we know it. And we know the reasons why: the pandemic, the war in Ukraine, disruption of global food value chains, record-breaking extreme weather events. They are all a clear manifestation of what we call a new uncertainty complex, that is problems mounting on top of each other. There is a promise, but also an opportunity in this uncertainty. And I think that this is really what we need to look at now, that, you know, as we used to say, you know, in each moment of trouble, there is a solution, there are ways forward. But in order then to seize these opportunities, we need effective development cooperation. We need these partnerships, as I was alluding to, between governments, between development agencies, between businesses, civil society organizations, and also trade unions. speaking about that inclusiveness, we can only achieve greater development gains through transparent and also then, of course, accountable collaboration that is needed then to rebuild the trust among impactful partners to achieve. In development countries, as we know, private sector operations constitute about 60% of GDP. It generates 90% of jobs and 80% of capital inflows. And since the pandemic, and UNDP has been accompanying this, since the pandemic first swept across borders and boundaries, we have seen how the private sector, especially large multinational corporations, served as critical first responders in many ways and were partners in the COVID-19 pandemic as a provider of technology, as innovators with the skill set, services, and of course then also not least trying to safeguard employment opportunities across the board. We need to build on this momentum and ensure that the private sector plays an even bigger role in contributing to the sustainable development goals, as we need to get back on track and move forward instead of in reverse, which is the case right now. Businesses are driven to engage in development cooperation by a clear match between business and the development case. We see this increasingly. We see the interest of CSOs. We see the interest among young employees also. This is often driven by operations that scale nowadays in a different way than it used to be, launching new revenue-generating products or services, or leveraging also network benefits. So things are really shifting, as we have spoken about this for many years. A good example of this is SAP, which is the market leader in the enterprise application software, as many of you know. And both as a BCtA inclusive business member and a valued member of the Kampala Principles community of practice, SAP aims to accelerate, to scale impact on smallholder farmers through SAP rules sourcing management solution for better management and sustainability data, connecting then smallholder farmers to global agriculture supply chain. There are many encouraging things happening within the partnerships that we have been able to accompany as UNDP. On the development side, SAP addressed the need to formalize the cocoa value chain to stabilize the prices, and you can just imagine how important this has been. And on the business side, SAP guaranteed great transparency, traceability as well, and sustainability to the cocoa supply chain, as well as improve the operational quality of the processing of cocoa beans. It is really critical to find ways to support businesses' capabilities to engage in development and cooperation. And we need this multi-stakeholder partnership at the country level effectively, where we can put forward our capabilities, our networks, knowledge, and really share ideas how to move forward. UNDP, with our presence in 170 of the member states, with a broad mandate ranging from poverty reduction to the work we do also in conflict affected areas, and not least being one of the biggest implementers with regards to climate change and environment activities, but also energy activities on the ground. We are an ever evolving ecosystem of government, development agencies, private sector, civil society partners. And we find that this is a demonstration of the momentum behind this collaborative multi-stakeholder solutions way of working that we need to get in place. The Kampala Principles provide a platform for effective development cooperation between the private and the public sector actors. And they also foster the much needed accountability, transparency, and trust. And I just wanted to bring forward one number also from our human development report. Only 30% of people across the world have trust in each other and also in important institutions. This number is going down. We have to make that change. Now, the Global Partnership for Effective Development Cooperation and the principles, and you know them, most of you, I believe, we're talking about country ownership. We're talking on focus on results, inclusive partnerships, and transparency and accountability. They have really been the groundwork in many ways to guide relationships between development partners for close a decade, helping then also to strengthen and improve the way that we can cooperate to ensure that all citizens are also invested in the process. Through the Global Partnership for Effective Development Cooperation and the Joint Support Team, UNDP is also working together with the OECD to monitor progress in effective development cooperation based on these principles. Business Call to Action is also a great example of UNDP's work with the private sector. It's an indispensable partner in delivering a strong recovery, forging the path to the 2030 and ensuring equitable opportunities for all along the way. And Business Call to Action has partnered with the OECD UNDP in the Global Partnership for Effective Development Cooperation. We have had a series of action dialogues taking place on the ground to really localize and see how the partnership could be used as a platform. We've been in Tunisia, in Colombia, and Indonesia, just as some few examples. And there we have really seen how the Kampala principles have really been useful also to foster these innovative multi-stakeholder collaborations that we need to see. In parallel to these action dialogues, BCtA also launched the Kampala Principles community of practice to support the uptake of these principles and really bring the best practices so we can use them in the global network that we have. The 3 action dialogues that I mentioned, the 4 COP sessions brought together over 500 participants, including private sector actors, development agencies, and public sector actors, as well as civil society organizations and union representatives. So this is really what the partnership is all about, bringing together also actors to find these solutions to move forward. We believe that by connecting the dots, we can lead towards implementation of integrated solutions, system solutions that are very much needed to move back, but also to move forward and to do things at scale. But in doing so, we need to look at the local ecosystems. We need to be relevant as always, and this is why we speak about the country ownership for the actors on the ground that wants to be part of this. So really, just to end, my highest appreciation to UNDP partners and those who support these initiatives within the framework also of BCtA. This is very much needed, as I said in the beginning. We need to inject hope that there are possibilities, that there are solutions. And I definitely believe that within this fora, this is what we can do. So let's also bring the findings that we have here, the best ideas, to the countries, to the people that we are there to serve, and let's make use of our worldwide network so that we can also show that what we do at the local level can also be done at scale. I invite you all to look at what we have on our websites, and happy to guide you further as well and to accompany you throughout the sessions today. Thank you.
Thank you so much, Ulrika, for that powerful keynote speech. All right, let's continue and get the ball rolling with today's sessions, and they will be focusing on the following: reshaping the future through integrated impact measurement and management, also leaving no one behind, opportunities for effective private sector engagement in development cooperation. Impact measurement and management are becoming a mainstream practice that encourages organizations of all sizes and sectors to plan for, frame, and also measure their impact. And for that reason, session 3 will aim to discuss and share the practical side of adopting impact measurement and management, plus how these practices helped many organizations better understand their contributions towards achieving the SDGs. And session 4, on the other hand, will see how we can amplify the call to action for implementing the Kampala principles. And these are a set of 5 mutually reinforcing principles that provide a platform for effective development, cooperation between private and public sector actors, fostering accountability, transparency, and trust. So without further ado, I now give the floor to session 3's moderator, Thomas Bilo. Take it away.
Great, thank you so much. It's really exciting to be here virtually as part of this session. My name is Tom Bilo, and I work as Chief of Program in UNDP Sustainable Finance Hub. And I really just want to build on Ulrika's remarks as we begin this session. Ulrika shared with us how we're experiencing a once-in-a-lifetime human development decline. and how there is an uncertainty complex which we face across multiple shocks to our development system, whether it be the pandemic, climate change, or security and geopolitical shocks. And really what we're seeing in relation to the finance architecture and finance system is that it is not fit for purpose. We know that the financial system has borne a terrible shock alongside our development shocks. We've seen how pre-pandemic financing gaps for the achievement of the SDGs have increased by 70% to $4.2 trillion per year. You know, astronomical figures, of course, but it's not just that the funding or financing gap has increased, but also that investments are being driven to sectors and geographies that are not enabling us to achieve sustainable development. We've seen, for example, this year, fossil fuel subsidies, government subsidies for fossil fuels now reach $6 trillion just since the Paris Agreement. And we've seen commercial banks continue to invest heavily, up to $4 trillion now since Paris, in fossil fuel intensive industry. And yet on the flip side, we know that global wealth continues to rise. We now have something in the order of $420 trillion of global wealth in assets. If we could monetize just 1% of that, we would meet the SDG financing gap. But that's not going to happen easily. It's a systemic change that we need to look to. Now, there are some pieces of good news, even in these bleak times. And, you know, one perhaps data point for us to bear in mind is around bond markets. You know, we've seen this year the green and sustainable development bond market top $1 trillion. But that's encouraging, and yet not at the scale we need, because the bond market itself is accumulated at $125 trillion. So it's still less than 1% of the bond market. So there is encouraging signs of change. We need to see that change taking place faster and more comprehensively across the financial system. And even as we do that, the issues of trust that Ulrika brought to our attention are also paramount as we look at changes in the financial system. If we don't have integrity and credibility around our stories of linking investment with SDG related impacts, then our project towards a more sustainable financing architecture is jeopardized. And that's why today we're focusing in this session on SDG impact management and measurement. Some data points that we may want to keep in mind, just contextually. PricewaterhouseCoopers did a recent study looking at companies, a study on companies which showed that 72% of those companies are indeed mentioning the SDGs in their reporting, but less than 1% are actually quantifying any kind of performance impact in relation to the SDGs. In many ways, the writing is on the wall. We have seen how over the last 7 years, there has been a 260% increase in green policy and regulatory measures for the private sector. So we know that there is a drive towards sustainable development that we all want to be part of. But to be part of it, we do need to be credible and have integrity to our work. The UNDP supported business call to action, of course, has been doing much in this area, and UNDP has taken its work with the business call to action and taken our support for SDG impact management and measurement to scale. UNDP works across public and private actors, as you know, and we provide support across the SDG impact management and measurement ecosystem. A recent report from the Business Call to Action, which I believe will be posted in the chat, shows that this really is a win-win for businesses in relation to bringing benefits both for their companies and for society writ large. Just to say, on the public sector side, we work across budget classification systems, taxonomies being put in place around private sector policy and regulation. And on the private sector side, which we'll be focusing on today, of course, in this session, we provide support to a range of actors of different shapes and sizes, tailoring our support for SDG-related impact management and measurement, whether it be for banks or bond issuers or startups or medium and small enterprises. We do have a set of SDG impact standards, which is our gold standard, if you will, for SDG impact management and measurement, but we tailor our support for what we see as an impact management and measurement journey. The changes that we need to see take place do not get achieved overnight. We know that, and we work hand in hand with many of you and others to try and see the transformative systemic change in business practices that is really needed for credibility in this area. I'm going to stop there. We have an amazing panel in front of us to share their experiences and perspectives. We've got a lot to get through. I'm going to have to be a mean moderator for us to be able to achieve that, so apologies in advance to my panel. We're going to have a round first of just getting a taste of our panelists, as it were. I'm going to be giving them just a minute to share really what I hope will be some personal perspectives on how they see the potential of impact management and measurement in enhancing management practices and decision making. So I'm going to go one by one. We're going to have a minute from each just to give us a flavor, and then we'll come back to the panelists with an opportunity for a longer intervention. We'll of course hope that we have some time also for some discussion with the large group of participants here. So this is going to be really exciting. So without further ado, I'm going to go to our first panelist. This is Louise. I hope I'm pronouncing your name right, Louise, and I'll just introduce you very briefly, if you don't mind, to save time. But Louise is the Director of Sustainable Development Unit in Fundació Gulbenkian, and I hope I'm pronouncing that right as well, Louise. Good, thumbs up. Now, Louise, I know that you've got a long experience in this area, so I'm not going to go through each and every part of that. And instead, I'm going to ask you really to speak personally about how you see impact management and measurement, enhancing management practices and decision making. And just 1 minute, it's the taster from you, Louise. Over to you.
Thank you so much, Thomas, and what a privilege to be in this panel. Thank you so much for the invitation. So here at the foundation, I think about the BCtA, I think in order to best tackle this new uncertainty complex, as Ulrika was mentioning, I think traditional philanthropy or the traditional provision of the public state will not be enough. So we need to think, how can we best leverage private resources and put the private sector into this game, not only to develop new solutions, but also as a way to find new ways of funding these solutions. So, but in order to best track those resources and having a sense that we are achieving the impact that we want and the change that we want, we need to have these practices in terms of measurement and management of impact. But I think sometimes, and that's my personal view, for a funder perspective, that sometimes can be like the starting point of creating a burden for the organizations that we are funding in order for us to best track them. to best track that impact. And at the end of the day, it's not ourselves that are at the front line of the impact, it's the organizations that we serve. So I think the challenge here, and I'm happy to elaborate that a bit more further in the discussion, is how can we turn this impact measurement and management practices not a theoretical and an academic burden for the organizations that we serve, but actually a decision-making tool that also helps the organizations navigate in this impact journey. So we're really happy and excited to be part of this discussion. Thank you so much.
Luis, really, really helpful. So moving from theory to practice, that's going to be a challenge for us in this discussion. Now, I'm going to move straight on to Shantanu. There you are, Shantanu. Lovely to see you. Welcome. Chief Operating Officer at the Mahindra Home Finance. Wonderful to have you with us. I don't know if colleagues are all aware that this is a unique business catering to the bottom of the pyramid, as it were, in over 88,000 villages with 700 branches in India. So this is fantastic, Shantanu. I'm going to ask you the same question. Personally speaking, what is the potential of impact management and measurement as you see it? Over to you, Shantanu.
Thank you so much, Thomas. A pleasure to be here. Just a brief overview. We are a billion-dollar mortgage financier in India. Started in 2007, and over the last 15 odd years, we've impacted or given loans to over 1 million customers across rural and semi-urban India. Our average ticket size of the loan is only as little as $1,500. And so we are really helping unserved and underserved customers in rural and semi-urban India. Coming to what you said, Thomas, I slightly disagree. I think there is a desire within all of us to be a business or to be profitable, but also to have purpose, right? Doing good even as you do well. And obviously there are maybe two extremes. You could do well as an NGO, but then you might not have the profitability to be sustainable, or you could do it as a business enterprise. Now, as a traditional business enterprise, there are profitability metrics, return on net worth, return on equity, which gets measured, right? But how do you really measure purpose and whether you are staying true to what you set out to do, right? And that's, I think, where impact measurement and management comes in. We've been a partner with BCtA since 2016. And, in a sense, to just keep it really short, I'd say that being a part of this ecosystem, BCtA and UNDP have been our conscience keepers, if you will, to ensure that, we genuinely are, a purpose-driven organization.
Great, Shantanu. Thank you so much. So another perspective there, the importance of using the tools of SDG, impact management and measurement, to do business with purpose, a toolkit to help us do well and do good. Thanks so much, Shantanu. I'm going to now move. We've had a foundation, we've just had Mahindra and of course the bottom of the pyramid loans that are provided. Now I'm going to turn to Emil now. Emil is the head of impact of a global internet service provider, as I understand it, Bluetown. So Emil, what's all of this mean to you?
Yeah, thank you, Thomas, for the kind introduction, and thank you for BCtA for having me. As you rightly say, Bluetown is a rural internet service provider, and very importantly, our mission is to connect the unconnected. So we want to get people on the internet that are not today. And I think for us, the way we see IMM, or impact measurement and management, is really for one, customer insights, right? Understanding how our service is influencing people's lives in both a positive and negative way, right? Because that really gives some insights that traditional business KPIs cannot. But of course, at the same time, it helps us map out the biggest risks that face us. And I think by the end of the day, if you want to make good decisions, you need good data. And I think IMM can provide just that.
Great. Thank you, Emil. That's brilliant. So understanding better how we influence people's lives through our provision of goods and services, and the importance of data and management systems allowing us to adjust our decisions accordingly. Emil, that's great. Thank you so much for that. Now we're moving to yet another stakeholder in the ecosystem, now a development bank, and I'm turning to Manfred. Hello, Manfred. Manfred is Principal Economist with the Development Impact Unit at the Asian Development Bank. So wonderful to have you with us. Over to you, Manfred. What does this mean to you?
Good evening or good morning. It's really exciting. It is starting introductory discussions. I'm really happy to be here. How is Asian Development Bank engaged with impact measurement? For ADB, as a multilateral development bank, impact measurement is very essential. It is practically part of our DNA, as we always have to show the development impacts. Our mandate is development and poverty alleviation. That is particularly relevant for the development cooperation projects that we do with the governments that are not commercially viable and where we spend taxpayers' money. But now, looking at the private sector, and I'm representing ADB's private sector window here, ADB's engagement also need to be justified there. We should be additional, not crowding out commercial lenders. And in addition to assessing the risks, we also look at the development impacts. As funding is limited, ADB's private sector department needs to select good investments. Expected impacts play a crucial role here, and we try to integrate them into decision making. We know this comes with challenges. How to measure this, how to balance the different goals, and how to monitor the achievements. I understand these are the topics for these panels, and we will learn a bit more about that later.
Great, thanks, Manfred. So, yet another perspective from the ecosystem of actors in the SDG impact management and measurement space, where, of course, a multilateral development bank like the ADB directly accountable for impact, development impact. So how can SDG impact management and measurement help feed development impact into the calibration of decisions that the ADB has to make with its private sector partners? Thank you so much, Manfred. Well, what an inspiring and rapid introduction to the panel. I apologize to the panelists for being so quick there, but here's our opportunity to linger a little longer with each of you and hear more about you and your organizations in this area. So, Louise, I'm coming back to you. I've got a couple of questions for you, which I hope you'll be able to answer for us. The first is, for your foundation, what are the key aspects of impact management and measurement that you focus on before investing in another organization? And as you tell us about that, it would be great to hear a little bit about some of the value of the innovative instruments that we sometimes use in this space that we all hear about, like social impact bonds. How do they work? How can they relate to this agenda? So, Louise, over to you.
Thank you, Thomas. So as I was mentioning before, I think the challenge that we have here is how can we set up a system, and more than a system, a dialogue between the funders like the Gulbenkian Foundation and our investees, the social organizations or ventures that we fund, in order to make sure that we are achieving what we both want, which is impacting some of the thematic areas that focusing on. In most of the cases, sometimes what happens is that each of the funder has their own impact management and measurement system, and sort of like imposing that reporting to the social venture that they are funding. And at the end of the day, that is not discussed with the social organization, so we actually don't know if that is like the best option for them. And then on the other side, that social organizations, because it has multiple resources and funding streams, sometimes ends up that they having to report differently to the different organizations, in most of the cases reporting about the same thing in a different way, just for the sake of like each of the funders having their own impact and management and measurement system. So I think that the first highlight that I would like to make is that this should be first negotiated with the social ventures, in order to make sure that this is not simply a reporting tool that turns into a burden for these organizations, but actually something that is meaningful for us, but also meaningful for the social organization, that can be perceived from the social organization as an instrument that can improve their performance and then best feed their decision making tool. So I think that the other point that I would like to stress is that I think it's not only about KPIs, and having quantitative data on impact. A lot of like social and environmental impact is nuanced. So we also need to have qualitative ways of reporting that impact on space. Of course, we always like numbers, and we always like to report numbers to give a size of the impact that we are achieving. But it's not, impact is not only about size and scale. So we need also to ensure that we have that ways of qualifying our impact and not only quantifying our impact. Now turning this into like some concrete examples and using social impact bonds as you referring to, that is a tool that we have used in the recent years and tested and tested here in Portugal in different areas, namely on employability, also on the prevention of foster care for children and youngsters at risk. For those that are not so acquainted with social impact bonds, basically is an outcome-based contract in between some investor, a private investor, a social organization, and a public organization. And basically there is a first investment from the private part to ensure that that project has the resources to work, and then the public part reimburse or pays for the intervention, but only if the outcomes are met. So it's quite an innovative way of establishing public and private partnerships, with all the risk going to the private part. So it's also quite a smart way for the public sphere to test innovation in some of the areas. That's what we have done here in Portugal. I'll give you an example on employability. In most of the cases, or the traditional ways of financing employability work is by simply paying hours of training, regardless of how many people after that training are actually getting a job or not. And that's what we want to achieve, and basically that social impact bond was paying for digital skills for youngsters from some vulnerable communities in Portugal. And our outcome was, after that training, in 3 months, if they were getting a job, and if half of them were getting a job, we would be paid back. In a nutshell, we were quite successful, so we were reimbursed. But in order for this to happen, and because it's again like outcomes based, we need to have this impact measurement and management system in place, not only to, at the end of the journey, to have report on like who are the ones who get the job or not, that would be like quite a straightforward thing to do. But actually, how can we best monitor all the process that first when they are attending all the trainings, what are the nudges that they need in order to be as successful as possible, and then if they have all the resources in place in order to do that employability journey. To conclude, I give an example of another social impact bond, actually not one of them that we were involved in, but quite a famous one, the first one on Peterborough in the UK, that was trying to prevent reoffending of young people in the UK. And one of the data that they were collecting actually was in the days that these inmates were being released, and then when the reoffending was happening. And actually, what they found out was that in the cases that the inmates were like released on Friday, the probability, the chance that during the weekend that some reoffending, some small crime happened was much higher than if they were released like on Monday or Tuesday, when they can have all the follow-up from some social organizations. That is quite a powerful example on how important it is to track these data points, not at the end of the journey, but throughout the intervention that we are supporting, so we can improve our work and our performance. Of course, when they found out this, there was quite a simple decision. We will not release the inmates on Friday. We'll release it in the beginning of the week, and with this when these social organizations are available to best help them in this journey. So in a nutshell, that's what we are doing, and using social impact modes, not only to test innovative funding instruments for the sake of it, but actually as a way to best collaborate between the different sectors and achieve greater impact. Thank you so much.
Well, Luis, thank you so much. That was really, really enlightening. And I think, from your perspective, from a Gulbenkian Foundation perspective, I'm hearing, the importance of understanding that our clients and partners have existing systems and monitoring frameworks, and that this has got to be a process of dialogue and exchange, with the intent to graft into those systems and monitoring frameworks, SDG or development, impact management and measurement, which includes that quantitative and qualitative dimension. I really enjoyed your expose on social impact bonds and how you framed it as, yes, a catalytic investment in development, but also most importantly, a vehicle to embed sustainable development, impact management and measurement into partnerships, into the ecosystems. And I really felt that the benefits of what you were describing there were not just in relation to the specifics of the instrument, but also the knowledge and data, the way in which that evidence can inform policy. And that's, I think, the story that you told on the prison release and reoffending example. So thank you so much. That was really illuminating. I'm now going to pass back to Shantanu. And Shantanu, I've got a couple of questions for you as well. How do you define in Mahindra impact management and measurement? That's my first question. I mean, how do you define it, and how has it shaped your actual decisions in the recent past? And then if you could tell us a little bit about, how you see IMM in this new uncertainty complex that Ulrika also raised, when bottom line pressures to raise funding and are very stark and challenging. So Shantanu, if it's okay, over to you.
Thank you, Thomas. Frankly, social responsibility and the company has a vision of transforming lives. So for my organization, IMM gets quantified by, the growth of the business itself, how many people we touch, how many lives we touch. And frankly, by virtue of being in kind of deep rural pockets, it's basically expansion, branch count, loans given, homes built, because all of that has cascading impacts on things like, how many women actually are empowered, because they will all be co-applicants in the loan. They will have a home in their name. They will have a title to a piece of land. Sanitation, education, all of these things have cascading effects once you have a good home, right? So frankly, deep and vast penetration has been at the core of our strategy. But that was all, in a sense, pre-pandemic, right? Because frankly, during the pandemic, survival took precedence, because frankly, there is no long-term impact possible if you don't even survive the short term. And so let me just tell you what happened to us in the pandemic. It was time for some real soul-searching, gut-wrenching, difficult decision, because business continuity itself was hampered. There were lockdowns across the country, so there were no collections. So there is no cash coming into the company. So obviously lending is stopped. It leads to a shrinkage of the portfolio. The delinquency goes up, which are threats which face any financial services company. And then when it comes to survival, you have to make some tough calls, right? Now, as we looked at our data, we realized that we were really funding the real bottom of the pyramid, right? And people who are at that strata of society, they actually have very little savings to fall back on if they are exposed to external events like pandemic, illness, maybe death, right? And because these, especially the pandemic, was at such a massive scale, we felt that our overexposure just to this one segment of customers was actually a very major risk. So we've since pandemic, taken a decision to diversify and go to, slightly higher, more premium segment of customers, still not people like you and I, Thomas, but what we will call as rural premium. So people in the villages, but maybe ticket sizes up to, $5,000, $10,000, which would still be a 10x over what we used to do. And also expand into semi-urban and affordable housing segments within the country, which then go up maybe up to $50,000, right? So still unserved, underserved, but probably less so, right? Also on the collections front, we had a very high cash collections business, 10,000 people in the company going out and collecting cash across rural India. And again, pandemic was an eye-opener. So we made a twin effort to empower digital means for our good customers and also enable them to make payments through other channels where you don't have to collect cash. So in summary, while we want to remain committed to transforming lives, in the post-pandemic world, we've had to make a pivot just in order to make the business remain for profit and sustainable. And we've been able to do this by using the analytical rigor and having to take some harsh but much needed decisions for survival. So that's it from my side, Thomas.
Thank you so much, Shantanu. And, I really liked the way you began your remarks by talking about touching lives. And, I think it builds on Louise as well. We're touching lives, not just in terms of the quantifiable outreach, but also in terms of the quality of the touch, the empowerment that you articulated, particularly for your women clients. And also, I think what was really inspiring for me was how you use your knowledge and data of your client group to adjust the portfolio and the way with which you work, which is really something powerful that should also be shared and used, in my mind, with other actors in the ecosystem. Your knowledge and data are really powerful for government decision makers as well. So Shantanu, thank you so much for that. I'm going to move now to Emil. Back to you, Emil. And we're going to ask you a couple of questions as well. I mean, first, from your perspective again, what is the value for businesses to adopt impact management and measurement? And if I could ask about Bluetown itself, I mean, how do you align revenues with impact? And how can financial related KPIs be aligned with impact related KPIs? So Emil, over to you.
Thank you, Thomas. And I think, as also mentioned in the introductions, right? I think it's critical for business managers to understand their impacts on the people they serve and the planet as a whole through effective IMM, basically because it will help them understand the true value of what they're doing towards their most important stakeholders, but of course also in order to ensure that they're aware of the risk they might be facing from running their operations. And I think if we zoom in on customers, right, or users as one of the most important stakeholders, obviously, I think it should be perceived internally and in management decisions as deep customer insights. As mentioned, I think in the introductions also that if you manage to make a positive impact on a user from using your product, the likelihood of that user continuing to use your product or even use it even more, I think is more likely. So making sure that you understand what kind of impact is it that you want to have and be able to measure sort of the pathway to that impact is really critical to achieve the impact that you want, but also to understand how your product is influencing the customer, the user. And I think that also benefits you in terms of marketing your product if you truly understand the value of it to your customers, or where perhaps that your product is not quite performing as you wanted to in terms of creating value for a customer, then that should be relevant for any manager. And I think again that goes, if you look at the adverse effects of your company or your product, the better you are at mapping where you have the most substantial adverse risk, the easier it is for you to make effective mitigation strategies to avoid it, and also to engage with your stakeholders concerning those areas where you might not be able to prevent adverse effects. So I think you can say that by adopting sort of effective IMM in your management practice, it can increase your responsiveness to your customers' behavior and wishes and ways of using your product, and also in terms of living up to key stakeholder demands by lowering risk. And what we've done in Bluetown is that we've integrated our impact KPIs with all our business KPIs. So essentially, they're not disaggregated from each other; they're completely joint, which is based on the conclusion that if we want to be a sustainable business, then what's important for impact must be important for our financials, and vice versa. And one thing integrating IMM did to our sort of core KPIs was to disaggregate all our customer KPIs on demographics. So most importantly, I think, in terms of gender. So basically, we want to connect the unconnected. And if you look at both globally, but in particular in the global south where we operate, there are a lot more women being offline than men. So if you want to achieve our impact mission, we need to find effective strategies of getting more women online, and we need to be able to track it. At the same time, if we want to be a sustainable commercial business, we need and we're operating in areas that are chronically low income and where digital divides are high. In order to also have a financially sustainable business, we need to find effective methods of getting more women online, because otherwise we have half the potential customer base being out of our reach. And measuring that, or having each of our customer KPIs always gender disaggregated, also means that we can quickly highlight where could be some communities or areas where we are not performing well, and what might be the reasoning. And So one of the first results that we got from this, which were actually quite simple when you think about it, was simply that our resellers were predominantly men, or at least in areas where there was predominantly men, we had fewer female users, right? So that was a huge problem for our impact, but also for our business, because it meant that if we hired female resellers, our potential user base would increase. So just to use that as an example of how, you know, business and impact must go together, or at least we've seen that being very effective in both increasing our impact and the financial viability of our business. Another example on more sort of the environmental front. So the telco industry, which we're part of, is one of the most polluting and emitting industries in the world, and in particular in rural areas where the big telco towers are typically powered by diesel engines that pollute locally and emit a ton of CO2. And so when we develop our solutions, we knew that they needed to be solar powered. And of course, the big challenge is to make our systems energy efficient enough to be able to run solely on solar. And so one thing is that the more energy efficient we make our systems, the better it is for the local communities, for the CO2 emissions at large, but also the more cost effective is our service to build and to run. So the two goes very much together. And I think also in terms of internal motivation, you know, having a KPI that's truly about reducing our company's emission, reducing our footprint, reducing local pollution is really something that can motivate you as an employee or as an engineer working on marginal improvements. You know, working on marginal improvements to increase your investors' return, you know, can be a motivation, but to do it to help the communities you're working in, I think is a much larger motivation. And so again, I think to sort of sum up, if you want to be a sustainable business, the impact that you have, or the most important impact indicators you have, must be aligned with your most important business KPIs, because otherwise there is something you know, misaligned between your intention and what you're actually doing. And again, I think that also helps you use IMM in a way that's not something that's an extra bureaucratical exercise in your company, but something that provides a direct value. And I think, you know, it was also mentioned earlier around quantitative versus qualitative indicators. And I just want to also highlight that while a lot of the things we do are quantitative, because they're also easy to report, stakeholders to understand it, managers understand it, etc., some of the most powerful things can come from qualitative. One thing that we're doing is we are simply, when we're serving our users, we always ask, so what is the most significant change in your life based on using this service? And it's a completely open-ended question. And often it highlights some areas where our fixed systems did not capture well enough both some of the potential negative impact, but also some of the positive impacts that really mattered for people. So I just want to really highlight the importance of also doing qualitative measurements when working with IMM. So I think those were the comments from my side. Thomas, thank you.
Really, well, that was absolutely fantastic, Emil. And I love the way our panelists are nodding and agreeing with each other as some threads through the conversation come out, the importance of quantitative and qualitative measurements. I also loved the way, Emil, you talked about the whole business model, all the way down to individual motivation, something that Shantanu also raised, the values by which we make decisions in our lives, sometimes driving the way that we do business, and how sustainable development, impact management and measurement can actually facilitate that right down to the individual level. I also really enjoyed the way that you described how understanding clients and users is really quintessential to better calibrating business to risk and return. So I think that was really illuminating, and also how, you know, some of these measures around energy efficiency are both delivering development impact in terms of CO2 reduction, as well as you know, win-wins for business in terms of cost reduction as well. So Emil, that was really fantastic. Thank you so much. I'm now going to pass back to you, Manfred, and back to the ADB. And I really wanted to ask you, for the benefit of our group here today, you know, how does the ADB's private sector department use the concept of inclusive business to increase impact? And if you could also, you know, tell us about how you know whether an investment does impact and benefit low-income groups, what sort of measurement frameworks you use. So Manfred, over to you.
Thank you. I love the discussion, and it's very interesting to see this perspective, because it's a bit different perspective how we see it, because simply we look as a financiers into the total market, and a lot of the statements is coming, let's say, a bit from bottom up, and that's actually very interesting for us to see. ADB welcomes projects that support an inclusive business model and that benefits the base of the income pyramid, as we call them, or which is a synonym for the low income groups. And I mean, I think this is nothing new in this ground, but let me just repeat it, that ADB defines inclusive business as a business entity that generates high development impacts by improving access to goods and services for the base of the income pyramid or the low income groups, or providing income or employment opportunities to low income people as producers, suppliers, distributors, employees, or even employer. So basically we look here a bit like integrating the underserved population into commercial value chains. At ADB, at the private sector department, 22% of the project which we committed last year support an inclusive business approach. So not all, and ADB has multiple goals and strategies, and projects need to fit well into various categories. Inclusive business is only one, but a very attractive feature, and it helps to get ADB internal approval to provide loans and funding. So in a certain way, we look for that, and that's how to say an attractive feature then for us to say, yes, that is the project we would like to support. To your second questions, and I think we are a bit at the end, so let me allow to go here a bit more into details. How do you know if an investment benefits low-income groups? ADB undertakes an assessment. We ask who are the beneficiaries. This could be people as producers, suppliers, distributors, or employees. And we ask to what income group do they belong to? Simple, but unfortunately, often data is not easily available, especially if you speak about bigger companies and you speak about a kind of range of clients, of beneficiaries. So we need to look a bit more careful and a bit more systematic. We worked then with our borrowers and clients to get such data, and I actually enjoy very much such dialogues with them, because this already improves often the awareness and the communications, and it's often an interesting mutual learning process. However, often pure income data of end clients and employees or farmers is not available. And then PSOD, the private sector department, we have there a kind of tool where we use proxy indicators. An example is a bank in Uzbekistan that started microfinance lending. Their branches are mostly located in rural areas. Around 60% of their clients are SME, agricultural borrowers, and small retailers. But if income data of the borrower is not available, we still need to make a judgment call. Do we understand this is inclusive business or not? And here we look then on certain characteristics that had been available. Like for the agricultural borrowers, there was available the size of the land for agricultural activities, partly it was available. And we use that as a approximation to income, for income level. We see that a borrower are small farmers, with the land is ranging from, in that case, it was 0.2 to 1 hectare. And with that approximations, we could really assess that to say, hey, look, this is really inclusive business. And we could actually say, yes, we are sure that if we label that way, we are fine. Another example, and I just refer here to to Shantanu, who is in the same business. If we look into low housing financing, we look on refinancing the banks, not the end clients. But if then this bank is, for instance, using a national scheme, a kind of a subsidy program where they have reliable qualification system, we as well can use this data to say, oh yeah, if so many percentage of them is actually qualified for a certain subsidy or for a certain government program which is targeting low income, then we know as well that this is a low inclusive business. So such proxy indicators helps us. And if you are a bit looking into that, actually, it's not too cumbersome to come to the conclusions. And for us, this is really a kind of important label if we have this. And therefore, I can only say, yes, it's details and it's a bit assessment work, but the message what you can attract to that as an entity on the business level, but as well as a financier is always good. And it's basically reinforcing the good things that this company is already doing. Not sure if I could go on explaining others, but I think time is as well running. So I turn back to you, Thomas.
Yeah. Well, thank you so much, Manfred. And again, bringing in a different perspective, a different role that you have in the ecosystem as a financier, a multilateral development bank. You really helpfully described for us how, integral to the bank's model is development impact, and right from the identification of projects, the importance of development impact is critical in the decision making. You also highlighted to us, I think, how your role in the ecosystem requires that your partners and clients also have impact management and measurement systems in place that can enable you to be accountable for the impact of your financial flows. So that was really interesting, Manfred, to share that slightly different perspective. Now, we have a large audience and some questions are coming up, and I'm seeing them in my chat. I have to paraphrase them a little bit, so apologies to Christine and Maximiliano in advance. Our first two questions come from then. And our first question from Christine is really about the multiple measurement and reporting frameworks that are out there, the multiple standards around impact management and measurement. And I think our question is really around how that might be a bit of a distraction, how it might actually prevent what we're trying to take forward in terms of impact management and measurement by undermining the capacity of some of our clients and partners to really focus on impact and impact measurement. Now, I see a few nods there. I'm gonna start, if it's okay, with Louise, because Louise, this is something you yourself raised. Can you share reflections on that question?
Yeah, I think I was nodding because I was agreeing with that. Sometimes too much frameworks cannot be like the best solution, because we actually start to compare that frameworks in order to check what are like the best ones for us to use, and not actually making the best question is, why are we doing this? And if all this instruments and quite a complex system is actually needed in order to do what we want to do, and also trying to best balance, in terms of like time management for the social organizations, what is actually more feasible. I think on the other side, I think we will never have the perfect system in order to track impact. I think it's a matter of like testing some hypotheses and improving as we go. But if I had to pick up one, and actually it's not that we are like using it like in a straightforward way, but it was most of our inspiration. There is a lot of work done by the impact management project that is basically do like 5 questions and quite a straightforward way to start thinking about what are like the key elements that we need to track as the project flows, that can actually be, you know, quite a lean way to start thinking about this. But sometimes, you know, and to finish as I started, I think it's we need to practice what we sometimes preach, and not, you know, sometimes spending too much on like academic discussions about the best framework, but actually test it out and improve it as we use it. Thank you.
Great, thanks, Louise, for sharing that. I'm going to build on the question because I do think it's a challenge for us, and let me take a sort of ecosystem perspective here, because I guess what we are all aiming for is something that's interoperable or somehow comparable across different organizations. Because really, you know, when we started this conversation, I highlighted to you how, you know, what's at fault here is the entire financial system. And what you're highlighting for us is some of the innovations and the pioneering work that you're taking forward to bring to that ecosystem a closer focus to impact management and measurement. But if we're all doing different things, will we be able to, you know, ensure that this adds up to something coherent and systemic? Any reflections on that from the colleagues or the previous question? I'm looking at you, Emil, at the moment, because you seem to be nodding, which is always a favorable sign. So, Emil, any thoughts on this?
Yeah, I think, you know, this debate is really important, and I think it always comes up, and it has come up for the past 5-10 years, and it remains important. And I think the reason why I was smiling is also that we've been through this process as well of trying to map all the different frameworks out there, all the different policies and practices, and really ending up being a bit confused and thinking, you know, like we will never be able to do this, right? And I think what helped us was at the end just focus on what matters most for your company, organization, and what matters or where you have the highest impact, be it positive or negative, right? Because if you focus on sort of your core stuff and perhaps have some sort of relation to the SDGs, which seems to be quite universal, and then chances are that when you then are faced with a Manfred and ADB or another financer, investor, you would be able to take your framework and adapt it to their needs when it becomes relevant. So rather than spending all your time trying to make something that fits for everyone, focus on what's most important for you, and then hopefully as your conversations with investors, etc., advance, then you can adapt it if necessary to their specific framework. So rather have something of high quality than trying to fit into a lot of boxes that you might not fit.
Great, thanks for those reflections. So, Manfred, any thoughts from you?
I can try my commenting on that. The topics are very interesting and controversial, actually. What I see here is definitely we have an environment where we have a lack of standards and comparability on the measurement frameworks. And as well, we have a kind of situation where we see a bit, I mean, the negative part name would be whitewashing, or we see a bit that that there's used a lot for marketing and CSR, but not really the accountability there. But I'm not too worried about that, actually. I think it happens, and I think we have to counter that by more accountability. But what I see actually is, look, doing that, we have more positive impacts because other competitors see this, oh, there's something happening I have to do as well, I have to think about that. And that thinking about that awareness creations, that is as well actually kind of positive impact what we see in the market. Therefore, let's say instead of focusing now on regulating and standardization and on kind of external reviews, which all would be in a certain way welcome, I would rather focus on, say, let's increase the outreach and let's send a message out that everybody should actually do that. And for us, and I think this is as well something I would recommend to all the kind of organizations who work with setting up with frameworks and with monitoring, it's always good to have this long term, right? I mean, if you do this once up front and then it's done and you use the label for the next 10 years, obviously that is a bit how to say, inviting to overstretch the credibility. But if you have to monitor that, if you have to look back, if you have to be accountable for what you promised, if there is some KPIs and somebody's coming back to look at that, or you have to report back, then it becomes powerful, even if the initial motivation was more to say, let's polish a bit our image.
Right. Right, thank you, Manfred. That's really, really helpful and frank intervention. So thank you so much. Now, Shantanu, coming back to you, just in case you want to share some thoughts, I'm sure you will.
Sure, Thomas. Frankly, I feel that let 1,000 frameworks bloom, right? I mean, if just because there are more frameworks, that's for academics. You can have multiple frameworks. But like Emil said, it's for the organization to figure out, what they want to follow. And you should not try and, frankly, impact is not accounting, right? So there is no one framework which will fit all. You should do what's right for you and your business. I think there will be a self-selection, both of investors, customers, other stakeholders who your measurement of impact, like everyone on the panel said, there's qualitative metrics, there's quantitative metrics. Like Manfred said, very often there are proxies that you have to use. So data is not all that easily available. But if the intent is right, I think there are enough stakeholders out there who will find each other and basically end up driving positive value for society. So that's my thought.
Great. Well, thanks, colleagues. I think those are really important reflections. And, as we come to towards the end of our session, I think this is a really useful conversation to frame, where we're heading and where we're at. I mean, I think for UNDP, we really look forward to working with you. I mean, I think we're all recognizing that change is happening, that actually we're seeing some pioneers. You are all pioneers in terms of bringing impact management and measurement to the core of business practice. But the market is huge, and embedding this in the market is going to be a challenge for all of us. You help inspire others in the market, and for that, great thanks. Your stories around what works and what doesn't, your advice on, really starting with what works for you rather than looking to the many frameworks for measurement and monitoring that are out there. I think, we're hearing that size matters too. This isn't a one size fits all approach. I think that, we've heard from a financier, from the Asian Development Bank, and again, thanks for that, Manfred, that you have a slightly different function also in the market, in that you can catalyze change in your partners, in clients too, in terms of how they look at impact management and measurement. I do think that, from a policy and regulatory perspective, change is also happening. It's not just in business practices, particularly, on the climate and green transition side, we're seeing, that increase in policy and regulation that's being applied by governments. That too will drive change, but we need to be careful to ensure that it drives change without, becoming so burdensome that it threatens some of the smaller enterprises and business practices that we have to engage with. And I think, for me, I'm hearing how this is a journey, how, we really need to see this as a change process, both for businesses, but also for the ecosystem writ large. Now, we do have a question here for UNDP, specifically from Maximiliano, who's, really asking, how can we pivot the capital markets, venture capital, towards more impact-oriented investment, particularly in the segments of the population that need it most. Now, I'm going to I don't want to monopolize the conversation. It's a question to me, but why would I answer it when we have the four of you there to help answer that question? So it's less about the impact management and measurement side, but more about the capital flows side. What is it that we can do to pivot, as I say, more financing towards these more impact-oriented areas? Now, I know we heard Louise about social impact bonds earlier as an instrument that can do that. Now, I hope we can hear perhaps a bit more about that or some other examples, and then we'll have to wrap up and let colleagues go to their coffee break. But any thoughts on that? How we can pivot more capital investment into these forms of development-oriented investment? Maybe Louise, because you started with social impact bonds, and that's one form, that's one instrument for this. Any other reflections from you before we pass around to our other colleagues?
Sure. I think we've mentioned social impact bonds, but we are also using other instruments. We are also investing in some impact VC funds, and for us it is been a great journey, because as you know, the model of the foundations is based on like managing our assets in a way that assets provides a return, and is based on that return that feeds the annual budget of the foundation. But foundations can be special investors, and the way they allocate their assets can also be a way to accomplish the impact, and in the impact and accomplishing their mission. And a lot of the foundations are making this shift for trying to check what are like the impact investing opportunities that can be better for allocating their resources, and we are doing that. And one of the ways are via this by investing in impact VC funds together with other investors, namely from the private sector. But again, the foundation can be quite a credible investor on these vehicles, and that also gives more trust for other private investors to step in. And we are lucky enough to have other companies also investing. Another topic that the foundation is not working at the moment on that, but there are other foundations, particularly Italian foundations, that are doing is in what concerns with accessible housing, and the housing can also be quite again like a traditional investment, but it can have this lens of impact, particularly by providing at accessible manners housing for people that otherwise will not have access to. So I think it's just a matter for us to start thinking. There are many ways that we can attract private capital to this arena, because impact at the end of the day is also an economic opportunity. And I think here at the table, and I'm not speaking for myself, I think we have some leading examples on how can we best blend business and impact. And I think the future will I think I am optimistic. I think we will come with more private capital being channeled to these tools. Thank you.
Louise, thanks so much for that. Any other of the panelists just want to, in a very short intervention respond to this challenge? Shantanu.
Sure, Thomas. So, frankly, I don't think there's a shortage of capital, right? I mean, if you just take microfinance and Muhammad Yunus and, what an entire industry it's created, which has had a lot of impact. There's been a lot of VCs who backed a lot of microfinance companies and have made good returns, right? So I think the question is not as much is there capital available, but what is the business model? Because very often impact businesses kind of traverse a very thin line between just being CSR or NGO versus actually being an impact business. And obviously, if you are more the NGO variety, you're not going to get too much private capital, right? So you have to prove your business model at some scale and demonstrate the ability to grow and have phenomenal growth and prospects for you to be able to attract too much capital. But I think the scalability and proving that it's a for-profit business model is a bigger challenge for impact businesses than the availability of capital.
Great, thank you, Shantanu. I'm afraid we're going to have to bring this to a close, and apologies to Emil and Manfred if you wanted to chip in here, but I've just had a message saying we've got a hard stop in just a few minutes. So let me try and bring this to a close, and also just to reflect on that question from Maximiliano. I do think there is no shortage of capital, Shantanu. You are absolutely right, and I think we used the data point again at the beginning of the session. I mean, in terms of global assets, there's $418 trillion worth. So there's no shortage of global wealth. But there is perhaps a challenge in terms of the project pipeline. And I, from the UNDP side, know that what we're trying to do on the pipeline side is work with governments and the private sector to identify investment opportunities that really can deliver on sustainable development as well as profit. And we have a team that's working in many countries now developing SDG investor maps, which really try and identify those opportunities, and then working with intermediaries to turn those opportunities into actual projects through origination and then towards due diligence for finance. And I think we can all do a lot together to identify those potential projects for capital investment, because there is, as you say, Shantanu, no shortage of capital, but we may need to help identify the opportunities for it to be deployed. Now, at the heart of all of that is what we were talking about today, impact management and measurement, because again, for us to have any credibility as protagonists, as champions for sustainable development, whether it be in our business, in our organization, or in the international community, we have to be able to tell a story of impact. And it's through the innovations that our panelists today, so thanks for joining us, have articulated the ways in which their organizations are bringing sustainable development, impact management and measurement into business practices, that we will inspire and be able to ensure that we move to a systemic change for the international community and our partners at the country level. So I really want to thank you all, Louise, Emil, Shantanu, Manfred. Thank you so much for such an inspiring discussion, and also to the colleagues who we can't see, who we hope have been listening and enjoying as much as I have been. So with that, I'm going to close the session, and I believe there's a coffee break now for half an hour, and then we'll be coming back for another really fascinating session, which my colleague Saba Sobhani will be chairing from the Istanbul International Center for Private Sector Development, on the exciting topic and challenging one of leaving no one behind, opportunities for effective private sector engagement in development cooperation. So thank you, colleagues. Enjoy the coffee break, and hope to see you in half an hour. Thank you.